Ever imagine going up against Wall Street, like the top investors, and actually winning?
It's a story that kind of turns everything we think about investing upside down, really.
We're talking index funds.
Yeah, index funds, they've shaken things up.
I mean, it seems so simple. Some people even call it lazy investing.
Right. But they've become a major force. That's what we're going to dive into today, this whole story.
This is going to be interesting. So
yeah.
Where do we even begin with this?
Well, I think we got to start with Warren Buffett, legendary investor. Back in 2007, he made this, well, a pretty bold bet.
Wait, the $1 million bet. I've heard something about this.
That's the one. $1 million bucks that a simple index fund, basically just tracking the whole market,
Would do better
than a whole portfolio of hedge funds. Over a decade, the bet was.
Whoa, hold on. Hedge funds. Those are for, like, the super rich, right?
Exactly. Hedge funds, they use all these complex strategies, have these high-price managers, and promise, huge returns.
But Buffett wasn't buying it.
He was skeptical. He always said most of these managers, they can't beat the market consistently, not even with all their fancy tricks.
So he was saying just a simple approach, hands off almost, could win out.
That was the core of it, yeah. And to make it even more interesting, the money wasn't for him.
Oh. What was it for then?
The winner's chosen charity got the $1 million.
So who were they backing?
Buffett chose Girls Inc. It's a nonprofit helping girls, empowerment and all that.
And the other side?
Ted Sides. He was with Protégé Partners. They do hedge funds. He picked absolute return for kids.
Okay, so high stakes, not just the money, but for these charities. What happened? Did the hedge fund guys win?
At first, it looked like they might. This all started in 2007, remember? Right before the 2008 crash.
Oh, yeah. That was a wild time.
Markets tanked. Hedge funds, they can kind of adapt, even profit in that chaos. They got a head start.
So their flexibility helped in the short term.
Right. But then markets recovered. And
Right.
that index fund, it started catching up. And then year after year just kept gaining.
So it wasn't even close in the end.
Nope. In 2017, Caesars admitted defeat. Months before the bet was officially over. Index fund won by a lot. And that's when people really started paying attention to this whole idea.
It's one thing to have a theory, right? But when you see it play out like that,
Makes you a believer.
it does. This reminds me, wasn't there something with Jack Bogle around then too? Some kind of symbolic moment.
Oh, you're talking about the Berkshire Hathaway meeting in 2017.
Yeah, that's it.
Bogle showed up out of the blue. Really significant.
Can you remind me, who was Jack Bogle again?
Oh, right. He founded Vanguard.
Oh, yeah. The
Yeah.
first index fund company, right? For like regular people.
That's him. He was all about index funds, thought they were the best way for most folks to invest.
So for Buffett to acknowledge him like that
Yeah.
at his own company's meeting,
It was huge, like a validation of everything Bogle had been working for.
like passing the torch, kind of, from one legend to another, showing this new way of thinking was taking over.
Yeah, definitely a turning point.
Okay, but before we go too far, how did index funds even come about? They're so different from, like, picking stocks and all that.
Yeah, it was radical back then. They wanted to shake up the whole industry, really. We got to go back to the 70s for that. A few people started questioning the whole pick the winners idea.
So basically saying, forget trying to beat the market, just go with the flow.
Sort of. They saw most pros couldn't beat the market consistently, especially when you factor in fees.
Fees. How do those play into this?
Well, the traditional guys, they charge a lot to research stocks, manage your money, all that. They promise better returns, but those fees eat into your profits.
So even if they do a little better, the fees could wipe it out.
Exactly. And that's where index funds come in. They just track an index like the S&P 500,
That sounds...
Standard & Poor's 500. It's like the most watched stock index maybe in the world. 500 of the biggest U.S. companies. Pretty good snapshot of the whole market.
So instead of picking stocks, you just buy all the stocks in that index.
Boom. You're mirroring the S&P 500 performance. No need for expensive research, no star managers.
Seems almost too simple. That part of the appeal? Just being simple, lower cost?
For sure. Jack Bogle, he was a pioneer, founded Vanguard in 75, and launched the first index fund for regular folks.
So you could get in on the market without all those crazy fees.
That was the idea. Bogle figured, keep costs low, match the market, and over time, investors win.
And Buffett's bet years later kind of proved him right.
Big time. But not everyone was happy about this. Lots of folks in finance, they ridiculed the whole thing.
Really? Why? Making it simpler, cheaper. Seems good for people.
Well, the industry was built on that active management idea. High fees, promises of beating the market. Index funds, they threatened that.
Too good to be true, almost. At least for the guys making money off the old system.
You could see it that way. But slowly, people caught on. Tired of the fees, not seeing those amazing returns. Then Buffett's bet, that really put index funds on the map.
Okay, so we have these pioneers fighting the old guard, then this epic bet everyone's watching. Sounds like a movie.
Yeah.
What happens next? How did index funds go from this, like, outsider idea to what they are now?
Well, that's where things get even more interesting. There's a new type of investment built on the index fund idea, but even more accessible. But that's a story for the next part of our deep dive.
Yeah, it kind of is like those underdog stories, taking on the whole system.
Totally. So what was this new thing that made index funds even better?
ETFs, exchange-traded funds.
ETFs, okay. I've heard of them, but honestly, not sure what they are exactly or how they're different from regular index funds.
Happens all the time. Basically, they're like index funds tracking the market, but they're traded on the stock exchange, just like any company stock.
So you can buy and sell them all day long. Regular funds, you got to wait till the end of trading, right?
Exactly. That real-time trading, it's a big deal for a lot of investors. More flexibility, you can react to the market, manage things better.
Makes sense. Anything else different? Besides how they're traded, I mean. Usually, ETFs have a little lower expense ratio.
Those are the fees that the fund charges to run things, yeah.
Yep. And even tiny differences in fees, over time, it adds up, especially for long-term stuff.
Every bit counts when you're trying to grow your money. So lower costs, more flexibility with trading, and you still get that diversification from the index. Like index funds, but on steroids almost.
Huh, you could say that. ETFs open the door for even more people to get into passive investing. Easier, cheaper to get a good portfolio.
That's wild. So index funds go from this radical thing to normal, then ETFs make them even more available to everyone.
Pretty much. And as they got popular, the types of index funds exploded too. It's not just the S&P 500 anymore.
Really? Like what?
You name it. There's index funds for all sorts of market slices, investment styles, even themes,
So like renewable energy companies
Yeah.
for specific countries or tech, healthcare, stuff like that.
You got it. Any niche you can think of, there's probably an index fund for it. Lets investors really customize their portfolios, whatever their goals are, how much risk they want, all that.
So if someone wants to invest in line with their values, like supporting green companies,
Yeah.
whatever, they can do that.
Exactly. It's another cool thing about index funds. More control over where your money goes.
This is all making sense now. We've got the pioneers shaking things up, then index funds, then ETFs changing the game, and now all these choices for investors, It's like a revolution in how we invest.
It really is. And it's not just in the US either. This is worldwide now.
So not just a trend here, but changing things globally.
Yeah. Some of the biggest investment firms like BlackRock, Vanguard, they're all over Europe, Asia, everywhere, offering these index funds to everyone.
So this idea that started with a few people in America is now how people invest all over the planet.
It's pretty amazing, right? A powerful idea can really spread and change a whole industry.
Totally. And as more people use index funds, there's got to be effects beyond just our own investments, right?
You're thinking about the bigger economic picture.
Yeah.
Exactly. How does this change things on a larger scale?
Yeah. What are the ripple effects?
Lots of economists are talking about that now. It raises all these interesting questions about how companies are valued, how they act even.
That's a whole other level.
Mhm.
So are we saying index funds could change how companies do business?
It's possible. Think about it. If most of a company's stock is owned by index funds, which don't really do anything, they just hold it.
They're not like those activist investors always pushing for change.
Right. Maybe that takes the pressure off companies to focus on short-term profits.
So they can focus on the long game, building a sustainable business, stuff like that.
Maybe, yeah. But there's another side to this too. Some worry that if everyone's just passive, nobody's really watching these companies. Could lead to less innovation, maybe lower performance overall.
So good and bad, maybe. Less pressure to just make quick money, but maybe less drive to be the best. Man, this is complicated.
It is. We're just starting to figure this all out, As index funds reshape things, it raises all these questions about the whole economy. And to really get into that, we need to head into the final part of our deep dive.
All right, let's get into it. How are index funds changing the whole economy, you were saying?
Well, like I said, it's got everyone talking, economists, analysts, everyone. More and more money going into these funds that just track the market. It makes you think, how does that affect how companies are judged, how they act?
So you're saying how a company behaves could be influenced by index funds. That's a pretty big deal, if so.
Yeah, it is. I mean, imagine a big chunk of a company's stock, it's owned by these index funds. They're passive, right? They just hold it.
Not like those activist investors always pushing for change, yeah.
Exactly. So maybe the company feels less pressure to just chase quick profits.
So they can focus on the long term, building a solid business, not just making a quick buck.
That's the theory anyway. But, of course, there's always another side to these things. Some people worry if everyone's just passively invested, who's really keeping an eye on these companies?
So they could get lazy, not innovate as much.
It's a possibility. Maybe performance suffers overall if nobody's pushing them to be better.
Wow, so it's kind of like a trade-off. Less pressure for short-term wins, but maybe less motivation to really excel too. This is more complicated than I thought.
Oh, for sure. And we're only scratching the surface here, to be honest. Index funds are changing the game, and we're just starting to figure out what it all means.
Makes you think, huh? So we've gone from $1 million bet to how index funds started, then ETFs, and now this, how it affects the whole economy.
Right.
What's next in this story? What do you think happens from here?
Haha, if I knew that, I'd be on a beach somewhere. Nobody can predict the future, right? But one thing's for sure, index funds are here to stay. They're only going to get bigger.
Okay, so what's that mean for regular investors, like me? Is the old way, picking stocks and all that, is that dead? Should we all just put everything in index funds?
I wouldn't go that far. Index funds, they've made investing easier for everyone, no doubt. Low cost, well-diversified, it's great. But there's still a place for active investing for sure. Especially if you're willing to do the research, learn about companies, maybe you can beat the market.
So it depends, basically.
Yeah.
Your goals, how much risk you're okay with, all that.
Exactly. The important thing, whether you're active or passive, is to know what you're doing, understand the choices, and make decisions that are right for you, for your situation.
That's good advice. I like that. And for someone just starting out, sounds like index funds are a good place to begin, though.
Absolutely. Simple way to get into the market without having to be a stock expert.
I've learned a lot today, that's for sure. History, how they work, good and bad sides, and even this big picture stuff about the economy. What's the, one key thing you want people to take away from all this?
I think it's about giving power back to individual investors. Index funds, they took away a lot of the mystery, the complexity. Now, anyone can get into the market, have a chance to build wealth over time.
It's really a story about changing the system, making it fairer, right?
Yeah.
Plus, proof that sometimes the simplest solutions are the best.
Couldn't have said it better myself. And to everyone listening, keep learning, keep exploring. There's always something new in the world of investing.
Great advice. Thanks for joining us on this deep dive into the fascinating world of index funds.